What's going on, guys? It's Investing Hustle here, and today we're going to take a look at how companies are doing in the post-market. We have the new analyst price target for Canopy, Tilray, Aphria for the month of February. Should Cronos acquire Aphria? And 8 facts about Aurora Cannabis last quarter performance and more. So hope you guys enjoy. And before we get started, don't forget to leave me a thumbs up and let me know what you think about Cronos acquiring Aphria. Right now, this is just an article. Nothing is guaranteed. This isn't 100% written in stone. It's simply an article that I'm going to read to you guys. So let's get started with the post-market. So right now, Aurora Cannabis post-market, and right now it's 5:32 p.m. on Wednesday, February 13th. Aurora is currently down 0.21% in the post-market, so they're only down 1 cent. So not too much movement going on with Aurora Cannabis. We're going to look at Canopy real quick. Post-market, Canopy's up 1 cent. Hexo's currently down 2 cents, down 0.27% in the post-market. Cronos is currently down 1 cent in the post-market, and Aphria is currently down 5 cents in the post-market. So we're not seeing too much major movements right now, but right now it's only 5:33 p.m. So anything can happen within the post-market and the pre-market tomorrow. I'll see you guys tomorrow at 9 a.m. in the pre-market. Now let's get started with the analyst price target for Canopy growth. So Canopy is scheduled to announce its third quarter earnings on February 14th after the markets close. Canopy growth is expected to see mediocre rise in its sales in the upcoming third quarter. The company is expected to report sales of 87.9 million Canadian dollars, which will likely rise 300% from 21.7 million Canadian dollars in the third quarter a year ago. So let's look at the new price target right here for February 2019. So target price. As of February 12th, analyst consensus price target for Canopy growth was $69.70, which was nearly 8.2% higher from $64.40 Canadian dollars. The company's median target price was even higher at 70 Canadian dollars in February. Looking at the closing on February 12th of 58.3 Canadian dollars, the company's price target would leave 19.5% for an upside. Canopy Growth is about to release its earnings, so things could change for the better or worse regarding the target prices and analyst recommendation for companies like Tilray, Cronos Group, and Hexo. So in the above chart, among 11 analysts that covered Canopy Growth stock, there was an overall buy recommendation for the company. 2 analysts recommended a strong buy, 7 recommended a buy, 1 recommended a hold, and 1 recommended a sell. So the next company will be Tilray. So Tilray has been one of the most volatile stocks in the cannabis sector compared to Canopy Growth, Aurora Cannabis, and Cronos. The company has a low float compared to its peers, which makes it riskier for investors. So as of February 12th, analyst consensus target price for Tilray was $131, which was nearly 3% higher from $127 in January. The company's median target price was lower than the mean target price at $120 in February, which remained largely unchanged from a month ago. On February 12th, the company closed at $75.90. The current mean target price would translate into an upside of 72.8% if the current price converged with target. So in the above chart, 6 analysts covered Tilray and had an overall buy recommendation. None of the analysts had a strong buy on the stock. 3 analysts recommended a buy and 3 analysts recommended a hold, and none of the analysts recommended a sell. Next, we'll discuss analyst recommendation for Aphria. So Aphria reported its earnings on January 11th. Since then, the stock has risen nearly 30%. As of February 12th, Aphria has made a significant recovery since it came under pressure from short sellers. However, the stock was still trading at half the price of its 52-week high of $22 Canadian dollars. Let's look at the analyst rating and the target price for the company. So as of February 12th, analyst consensus target price for Aphria stood at a mean of 15.7 Canadian dollars, which was nearly 11% lower from the $17.80 in Canadian dollars in January. The company median target price was $14 in February compared to 16.5 Canadian dollars a month ago. Aphria closed at 12 Canadian dollars February 12th. The company's target price would leave 30.7% for upside over the mean. So in the above chart, 10 analysts covered Aphria stock and had an overall buy recommendation for the company. Among the 10 analysts, 2 recommended a strong buy, 5 recommended a buy, 2 recommended a hold, and 1 recommended a sell in February. Investors should take analyst recommendations and target prices with a pinch of salt. The industry is in a stage where analyst estimates are unpredictable compared to mature companies. And that's it for the price target. So now let's move on to another interesting article. Should Cronos acquire Aphria? So Aphria is facing a hostile bid from Green Growth, which prompted us to think about potential suitors among the Canadian LPs. Cronos has emerged as one of the top 4 largest Canadian cannabis companies with close to $10 billion in market value. While Aphria represents an opportunity for Cronos to fill its production gap, we think the dilution would be untenable for Altria. So should Cronos Group acquire Aphria? This question came to our mind after 2 things happened. First of all, the recent struggles at Aphria and the hostile bid takeover from Green Growth has prompted us to think about potential buyers for Aphria. Secondly, both Aphria and Cronos have been some of the best performers in the sector lately. We will discuss why Cronos could be potentially interested in Aphria, but why a deal is unlikely in the near future due to Altria's pending $1.8 billion investment in Cronos. Strong momentum. Aphria has recovered all the losses incurred by the short attack and now trades at a higher price than the day before Hindenburg launched the short report. And I'm just going to keep going. So why Aphria? There are 2 main reasons why Cronos should consider acquiring Aphria. First of all, we think Aphria's Canadian assets and market share represent an attractive addition to Cronos. Aphria could fill the production gap for Cronos with its 250 kilogram annual production capacity, being one of the largest domestic producers in Canada. Aphria could help Cronos beef up production capability that is somewhat lacking now. Furthermore, Aphria's supply agreement with all 10 Canadian provinces would provide an instant revenue source and access to the entire Canadian market. So secondly, the deal would be highly accretive to a revenue perspective as Cronos trades at a much higher valuation multiples than Aphria. Cronos trades at a ridiculous 485 times revenue last quarter annualized after its miraculous run since the Altria investment. Aphria, on the other hand, still trades at a much more reasonable multiple at 33 times despite its recent rally. If Cronos were to acquire Aphria, it would be highly accretive due to valuation arbitrage. So why not Aphria? So we think the main concern that would make Cronos think twice about potential acquisition of Aphria is the seemingly differing strategic focus between the companies. When Altria invested into Cronos, we noted that the tobacco giant purposely stayed away from growing tobacco and focuses on branding and product management. Similarly, we think Cronos' lack of domestic cultivation and market access might have played into Altria's preference. An acquisition of Aphria, which came with significant cultivation assets, might cause concerns for Altria. So moreover, for investors concerned about the potential implications of Aphria's scandal and the short attack, we think the risk is overblown. First of all, Aphria has begun its management reshuffling by announcing the gradual phase out of Vic Newfield, and one of the 2 co-founders, a new independent chairman, was appointed to the board, and the new CEO will be appointed in due course. So the conclusion, overall, it appears that the deal to acquire Aphria is unlikely at the moment, given Altria's investment in Cronos has not officially closed yet. We see any acquisition that would significantly dilute Altria's newly acquired 45% stake in Cronos as unlikely, definitely not before the deal closes. A cash deal is also unlikely given the historical of cannabis M&A and the appeal of using highly valued shares for acquisition. We think Aphria will eventually get sold, but Cronos might not be the most likely buyer at this point. We will continue this discussion on who could acquire Aphria. So let me know in the comment section who you think will acquire Aphria, or who you think would be the best company to acquire Aphria. And I know most of you are probably going to say Aurora, but Aurora needs to stop diluting all their shares. And speaking of Aurora, Aurora Cannabis 8 facts about last quarter's performance. So I'm just going to skim past all these facts. So let's go. Number 1, sales are skyrocketing. So if you guys want to read this full article, you guys could just simply type this in Google and you can read the full article. I'm just going to go through all the points. Number 2, production is growing. Number 3, prices are falling. And number 4, medical marijuana remains key. Number 5, it's not just Canada. I want to read this one. Unquestionably, Canada represents a big opportunity, but marijuana is still illegal in most countries. And as that changes, the opportunity globally is huge. The worldwide marijuana market is worth $150 billion according to the United States. Number 6, bottlenecks proved costly. Number 7, capacity is key. And point number 8, losses continue. So we all know about Aurora Cannabis net loss last quarter was a staggering $238 million. Every article I'm reading is having a different number. One says 267, one says 238, one said 290 something. But yes, they lost over $200 million last quarter. But before you panic, the loss comes with a big asterisk. The company must report unrealized gains or losses on its investments every quarter, and losses on its investments accounted for a whopping $120 million of the net loss in the period. For comparison, its prior quarter benefited from an $87 million unrealized gain. If we back out of the unrealized fair value loss, we we get a greater picture of Aurora's operating performance. Its selling and general administrative expenses only grew by 2% quarter over quarter to $66.4 million. Nevertheless, the operating expenses still dwarf the revenue, so it will be a while before investors can cheer profitability. So another one, I'm just going to skim past these companies. These 4 marijuana stocks could test February highs. I'm just going to let you guys know what companies. One is the Next Green Wave Holdings, ticker symbol NGW. Second company is Hexo, ticker symbol Hexo. Charlotte's Web is the third company, CWBHF. And the fourth company is Pot Network Holdings, POTN. If you guys want to check out this article, check out these 4 marijuana stocks could test February highs. And the last article is the cannabis boom will be a boon for these 3 top stocks. So the three top stocks right here are Pure Global Cannabis, ticker symbol PURE, Tilray, TLRY, and Canopy Growth, ticker symbol CGC or WEED in the TSX. And if you guys want to check that article out, you guys could type that out as well. So that's it for now, guys. I hope you guys enjoyed this video. And if you did, don't forget to leave me a thumbs up. And if you're not subscribed, don't forget to hit that notification bell and smash that subscribe button. And if you guys heard that in the background, that is my dog. So have a good one, guys. Bye-bye.